Hello friends, a very warm welcome to my channel. In this video, we are going to talk about KEI Industries. This sector and this particular stock has generated good amount of wealth for the shareholders in the last 3 to 5 years. And going forward also, it is expected to do well. This was chosen on a Telegram poll with more than 500 votes. Now you can watch our videos in Hindi also. You can switch to another language using the option available in the settings button. If you're new to the channel, please do subscribe and hit the bell icon to get updates of all the new videos that we upload. Here is a small disclaimer as per SEBI regulations. You can pause the video and read it. This will be the flow of our discussion today. We'll talk about the business model of KEI Industries in brief. Then we'll look at the stock performance in the last few years, the financial performance of the last 5 years of the company, the reasons why the stock has given such a sharp rally, the outlook of the management going forward, the valuations at present, the risks of investing in this business, and then form an overall view after this discussion. So let's begin with the business model of this company. As you know, it is one of the largest wires and cables manufacturer in India. When we talk about the wires and cables, they manufacture low tension wires, high tension wires, extra high voltage wires, wires and cables for household, industries, transmission lines, signaling cables, then winding wires, stainless steel wires. So across the entire spectrum of the wires and cables, they cover each and every product, especially the high voltage and extra high voltage cables, which is a niche area where this company specializes in. So they get revenue both from the B2B model, which is from the industries and the utilities, as well as the B2C model, where they have a very wide distribution network, heavily penetrated in India with more than 2,100 dealers. And 53% of their revenue comes from the B2C model, and their brand value is also very strong in India. When you talk about the margins in retail versus wholesale or retails versus the industrial, the retail gets just a little higher margin of about just 50 basis points. So the company which is doing around 10-11% kind of an EBITDA is the stable margins for this business over a long period of time. They have around 6 manufacturing units for the wires and cables and 2 manufacturing units for the PVC compounds, where they have done backward integration for their manufacturing process. In terms of the capacity of production, the cables are 1,94,900 kilometers per year. The communication cables are 28,800 kilometers. The stainless steel wire is about 9 million kgs per annum. They are also doing a greenfield capex, where we'll talk about it more in the coming slides. If you see the breakup of the revenue from which product or category which they are getting, the low tension wires contribute the highest, which is about 43.5%. The house wires and winding wires about 34%. The high tension wires constitute about 12%. The extra high voltage wires about 6%. Stainless steel wires about 1.9, nearly 2%. And the small portion of the revenue, about 1.7%, comes from the EPC. Now we'll talk about each and every product that they manufacture in detail, so that you get complete clarity about their business. So the first one is the low tension power cables, which is the LT cables in short, what we call it. These cables distribute power up to the capacity of 1.1 kV. So these are generally used in buildings, malls, factories, hospitals, etc. They are also used in the data centers. So indirectly, this is a data center play. Now, who buys these products from this company? The EPC contractors who are building the buildings or the factories, the people who are doing the maintenance of the industries, and the players who are building or maintaining the data centers. The second category, which is the control and instrumentation C&I cables. These cables are for carrying signals, not for power transmission. So let's say you are having a data center. A lot of information is passed on in the form of signals, like what is the temperature in the data center. So for the transmission of all this information, these cables are used. For example, let's say there's a commercial building or an airport. So which part of the airport has what kind of a temperature? Or if there is an app which is a building management system, the building management system is connected to the entire building through different cables. So these cables are used for that purpose. Another simple example for our household use could be, let's say you have an overhead tank and you have an automatic motor which transfers water from your ground floor storage to the overhead tank. So whenever the overhead tank is empty, that has to send a signal to the motor at the ground floor to transfer water from the ground floor to the top. So these kind of signals are also sent through these cables. So all the EPC players who are building or installing these kind of commercial setups or data centers buy these cables from KEI Industries. The third one is the high tension power cables, which have much more capacity of transmission of power compared to the low tension cables. So these start from 3.3 kV up to 33 kV. So establishments like the metro depots, the solar renewable parks that we see, the distribution of power from the substations to the wider networks is done through the high tension cables. So wherever such high power transmission is required, these cables are used. Now, who are the people who are buying from this company the high tension cables? People who are building different factories and industries, people who are building metros, airports, solar EPC players. So all these people buy such high tension cables. Now let's talk about the extra high voltage cables. These have even higher capacity of transmission, starting from 66 kV to up to 400 kV. So whenever the power has to be transmitted from the power generator to the first grid, such heavy transmission is done through this extra high voltage cables. And mostly you'll see either the government or the private players who are into power generation buy these kind of cables. And most of the high tension cables or extra high voltage cables, you find that they are laid underground. These are generally not laid overhead. Now let's talk about the house wire cables, which we generally use in our house or offices on a day-to-day basis. These are generally bought by us directly or by our electrician who's working with us. And the company has a large distribution base of more than 2,100 dealers from which we generally buy. The next small product which the company does is a winding wire. These are used in several products like motors, pumps, fans, compressors, etc. These are made of either copper or aluminum. And companies which are manufacturing these pumps and motors or people who are repairing it buy these kind of wires. Then a similar product called the stainless steel wire is also made by the company, which is having smaller uses in our homes and industries. So this is a brief explanation of the business model of the company and different products which it makes. The business of this company is easy to understand for us because we use this product in our day-to-day life. Now let's look at the stock performance in the last few years. This particular stock has been like a consistent compounder over the last 1 decade, especially post-COVID, when the people or the government started focusing on power generation more. When the renewable theme came into the limelight, the consumption of these wires and cables increased dramatically and the stocks got re-rated. So along with the consistent growth and re-rating of the valuations, the stock gave a massive rally and hit an all-time high of somewhere around 5,000. But from there we saw a sharp correction in the stock, which became half to nearly 2,500 levels. This was primarily due to a couple of reasons like valuation de-rating, and we heard of larger players like Adani or Birla coming up in their competition, which led to this knee-jerk reaction across the industry in the market. Thereafter, we saw the consistency in results and performance, and the sentiment started normalizing and the stock recovered from that 2,500 zone, and now it trades at around 4,100 rupees. The company did a QIP fundraising round at around 3,800 in 2024, and right now it is available slightly above that price. If you look at the financials of the last 5 years, they did a revenue of about 4,182 crores in FY21, which increased to more than 9,700 crores in FY25. So in the last 5 years, the revenue more than doubled in this company, and it grew at a CAGR of more than 15%. Similar pattern we see in EBITDA, which grew from 450 crores in FY21 to more than 990 crores in FY25. Even the H1 result of this company was good, and this result momentum continues even now. In terms of margins, the margins have been fairly stable. They've been doing an EBITDA margin of around 10 to 11% consistently. So market always likes consistency and visibility and certainty in growth. That's why these companies are most preferred by the investors and the institutional investors. The promoter holding in this company is around 35%. EBITDA to cash flow conversion, OPCF conversion, is around 41%, which is slightly less. It's a net debt-free company with about 1,500 crore cash on the balance sheet. Now, what led to the knee-jerk reaction in the price and recovery from there? The market believed that the competition in this industry is increasing. Adani spoke about entering this business. Then later they clarified that it is only for their internal use. The Birla Group entered this business. So people thought that something which is happening in the paint industry, similar thing can happen in this industry as well. So the valuations at one point of time started getting derated. Then later, when the market saw that the performance of the company was consistent, the sector also had tailwinds. In fact, in the recent quarter, the company increased their growth guidance. So all this led to the investor community getting back confidence in the stock and in the industry. That's why it bounced back from that 2,500 zone. Before we move forward, if you're not a part of a Telegram channel, do join today by clicking the link in the description so that you join the correct Telegram channel. Every day before the market opens, I share my view on the market. I also share how you should allocate your funds, your position sizing strategies, important news and views which will help you managing your portfolios much better. More than 9,000 people are daily in touch with me through my free Telegram channel. Now let's talk about the growth outlook of the management going forward. They have a pending order book of more than 3,800 crores, which shows that there is visibility for growth in the near term. They are coming up with a new greenfield project at Sanand. This new project has the capacity to do 6,000 crores of revenue at their peak utilization. They are adding more than 50% capacity compared to the existing units. For the next 3 to 5 years, the management is confident of delivering nearly 20% growth CAGR in terms of revenue. And looking at the past track record of the management, the investor community surely believes that they can do so. They feel that the EBITDA margin also will remain stable in the 10-11% range. So that also gives clarity. Whenever somebody is building a data center, roughly about 8 to 9% of the project cost goes in this product which the company makes. So this is an ancillary to the data center theme. They have started focusing on exports to diversify beyond the Indian markets, and they aim to do roughly 18% of their sales from exports by FY27. Now let's talk about the valuations, which is always the most interesting part. Historically, if I give the benefit of doubt to this company and see just the 5 years median EV EBITDA, it trades right now at around 31 times, but the 5 years median is around 23 times. At one point of time, this company was doing nearly 45 to 50 times EV EBITDA, which was very expensive. And that was one of the reasons for the sharp correction in the stock. The present valuation of 31 times, as per me, is on the higher side and not cheap. So from a value investor's perspective, this is not a value buy. Now, what are the risks of investing in this business? There could be fluctuations in the commodities which this company uses as raw materials. So if there is increase in the commodity prices and the company is unable to pass on that in time, then that could compress the margins of the company. There is competition intensity increasing in this space with the Birlas coming in and the existing players also expanding their capacities and penetration. The smaller players in this industry are also slowly getting bigger and bigger. So that could be a risk. Valuation wise, the stock is not cheap. So if somebody is buying aggressively at these valuations, that could be a risk. If there is an overall economy or industry slowdown, then this 20% CAGR which the company is aiming for, that could not be achievable. The establishing of the new manufacturing unit, utilizing it fully in time, completing it fully in time could be an execution risk. And due to the competition, if they start cutting the rates, maintenance of the margins at the same level in the future could be a risk. So now that you've understood the business model of the company, the growth prospects, the valuations, the financials, what is our overall view on the stock? If you're holding this company from the lower levels, you should continue to hold it because there is certainty and clarity in the growth plans of the company, and the management is clear and confident that they will continue to grow at 20% CAGR for the next 3 to 5 years. But if you are looking at a fresh entry and you are a value investor, these valuations at the current levels are not cheap, and you should wait for some correction before you start accumulating this stock. So that's about KEI Industries. I've tried to keep this video fairly simple and easy to understand. If you like it, hit the like button and subscribe to the channel. If you want me to make videos on your favorite stocks, do mention those names in the comment section. Even this was picked up from the last video's comments. Do join our Telegram channel by clicking the link in the description. Thank you for watching and have a wonderful day.